welcome back to the final part of 9 ways to lose money in the market. Number 3, technical analysis. Technical analysis, or TA, encompasses chart patterns and technical indicators such as MACD and moving averages. Most traders gravitate towards TA because it seems logical and offers a sense of control. My issue with the most common forms of TA is that random generated charts with fake data provide exactly the same patterns. This is proof enough for me that TA is merely finding patterns in chaos. I'm not saying TA doesn't have its uses or merit at all. It's just showing us what's previously happened in the price action. This is the problem, it's a lagging indicator. However, it can be useful for confirmation on a bigger idea that you have. The problem is when traders only use TA. What I want to do is just say be aware of the fact that TA may be more random than you care to think about, and the key is in the language. People will use the phrase failed breakout. If the price is going up, bumping its head on a resistance, people are anticipating a good strong breakout. If that happens, that will be confirmation that breakouts are a thing and they are reliable. But if it doesn't happen, they'll say it's a failed breakout. So in the language right away, it's implying that breakouts should always happen, and when they don't happen, it's failed, or they should more than likely happen. But it doesn't give any hint to the fact that it could just be 50-50. If it is indeed 50-50, then it's not a failed breakout, it's just exactly what we expect from the data. But for me, the successful traders, and there are successful traders who use chart patterns, so I'm not dismissing them out of hand, but they have developed risk management strategies and techniques for getting in and out of a trade safely. So for instance, they may wait for a pullback and confirm that the breakout's happened, and I don't want to go into or encourage anyone to day trade or use technical patterns, but this is a very common one, and they'll get long, perhaps let's say above their risking off of a level down here, but they've got discipline, and when their stop triggers, they don't trade again, they use good size, they take profit at a reasonable area. So all these things add up to a successful trade, not just the chart pattern. They could have got long anywhere probably, and risked off a reasonable area. The point is, a good trader is a good trader whether they use chart patterns or not. So as a newbie trader, don't think chart patterns are just going to be the savior and you just have to learn them and you're going to be rich. If it was that easy, the chart patterns would break immediately because every algorithm would just trade it, and like we discussed earlier, the market's very fluid and a pattern that works today will break tomorrow. Relying too heavily on chart patterns ranks pretty high in our list of top 9 ways to lose money in the market. But right up there at number 2 is winning back losses. This psychological trap of trying to win back losses tends to entail progressively riskier and riskier bets to try and get back to where you started. It's inevitable, traders are going to lose money. We're so prone to psychological fallacies and cognitive biases, as well as all the other things we've discussed, such as fees and slippage. So losing money is going to be part of what you're going to have to get used to, and if you have to fight to get back that money, you're going to take bigger risks. The trouble is, if we lose 40% of our trading balance, we're going to have to make back about 60% just to get back to where we were. As we feel more and more desperate, we make rash decisions, we take on bigger leverage to try and get back to where we started, and that drives us down even more. It's for this reason that the psychology of trying to win back losses, the desperation, ranks as number 2 in our list. And that brings us to our number 1 reason why people lose money in the stock market: discipline. Discipline underpins all the other 8 points we've mentioned in this video series. Day trading is one of the most emotionally challenging ways to make money. It isn't technically difficult, but it's emotionally grueling. Having discipline means we stick to our plan, we stick to our stop loss and our take profit targets. The trouble is, discipline is so hard in trading because there's no challenge, there's nothing to fight. You've got to stick to your plan and sit back and actually take the beating. If you're wrong, you've got to just accept it, and that's so difficult to do. We also have fight or flight instincts, but of course, there's nothing to fight. The market's going against us and we can't run, we can't hide. It's so difficult to not alter your strategy and make mistakes in the market. Discipline covers a lot more than that. Discipline is the ability to not have FOMO, fear of missing out, to happily leave money on the table and take your profit and not worry about what comes next. The list is endless. So for me, discipline is 90%, and I'm not even lying, 90% of trading is discipline. The technicals, the chart patterns are just a minimal part of making money. But the odd thing is, no matter how many times traders try to be disciplined, they just can't, and the problem is they don't know why. This section of the video I've got no images really to show you, because it's this emotion that's inside us. Discipline is an almost unknown quantity. It's hard to verbalize. You may think you're disciplined, perhaps you can get up in the morning and go for a 2-hour run with no problem, but you may have zero discipline with trading. Trading discipline is a delicate thing. It never comes naturally, and I think you'll always have to work on it. And that underpins the whole video series. Discipline is the hardest thing to attain, and it's a muscle that you have to just keep on working on. Anyway, thank you for watching this 3-part series on why most people lose money in the market. My aim is to help others avoid the mistakes that I've made over the last 6 years. I don't recommend day trading. I believe there's easier ways to make money, but if you do want to do day trading, please recognize the pitfalls and the dangers. It's much better to be aware of what could go wrong rather than just focusing on the Lambos and the gurus who tell you everything's easy as 1, 2, 3. If you've enjoyed this video, please give a thumbs up and maybe subscribe. I post videos primarily on high growth stocks which have pulled back considerably to a support area. So if you want to stay up to date with those videos, subscribe and you'll be notified. Thank you very much for watching. See you again.